Hey guys, welcome back. If this is your first time here, I'm Neil, the Adventures Investor. On this channel, we talk all things investing. Today, we're going to be looking at Facebook and trying to establish the intrinsic value and then trying to establish a margin of safety, a 50% margin of safety for the business, okay, and what we want to buy the business for. This is another full town value investing valuation metric, which he talks about in his latest book, Wilmore Danielle Town's book, his daughter, an investor, which I've recently just finished reading. Great book. I highly recommend it. It's definitely worth your time. I just listened to it through Audible, and they also have a real handy PDF as well that you can look over after you finished listening to it, just to sort of cast your eyes over some hard numbers rather than just listening to the numbers. So I highly recommend it. Anyway, we're going to be looking at a calculator that Phil Town has on his website, on the Rule 1 website. I'm going to leave links to everything I talk about today in the description. But before we jump to it, like I say in every video, I'm not a financial advisor. I don't know your financial situation. This is just a simple calculation that you can use in order to try and gain an intrinsic value of a business. And then you want to buy that at below intrinsic value, whatever that margin of safety that you're happy with, whether it's 20 or 30 or 40 or 50%, whatever your margin of safety is that you want to buy that at. Obviously, Phil Town, he harps on, and not just Phil Town, Warren Buffett, Monish Pabrai, and all these big value time investors, they always try and buy things at a 50% below intrinsic value. So that's what we're going to be going over today, guys. Okay, so Phil Town likes to use 4 different numbers that he looks at when he's trying to establish the growth rate of the business. So we're going to have a quick look at those right now. So these are the big 4 numbers he likes to look at. He likes to look at the net income or the net profit of the business, or net earnings. It depends on where you are in the world. It can be a bit different on different accounting standards. The book value, and then any dividends, if any, they're paying a dividend, the sales, and the operating cash, okay? So these are the 4 numbers that he looks at when he's trying to establish the growth rate, the windage growth rate, he calls it, in his book. So this is something that we're just going to be using Yahoo today to try and get the the future growth rate. A lot of different analysts are always analyzing Facebook, so it's kind of good gauge to sort of, you can have a look as well, do your numbers as well, but also have a look to see how close you are to the analysts as well. I think there's about 30 or 40, could even possibly be 50 different analysts analyzing Facebook at any one time, so it's good to sort of see what they're sitting at as well. They're obviously probably spending a lot more time on it than what you may be, so good to put a bit of stock in what they're looking at as well. But in this video, I'm going to be showing over where the numbers, we can pull the numbers from in order to put them into the calculator. So let's jump into it. Alright guys, so I'm over on the Rule 1 Margin of Safety Calculator and sticker price. This is just on the Rule 1 website, and then go over to Resources, Investing Calculators. I'm going to leave a link to this in the description below so you guys can do your own research and start crunching your own numbers on this. I'm just going to quickly show you where you can pull these numbers from when you're doing your own research and trying to get your own intrinsic value and then your margin of safety that you're happy with. So let's have a quick look here what we're looking at. Okay, so current earnings per share. Where you can look, there's a few different places you can find this. Let's start with having a look at Yahoo. Okay, so we're pulling up Yahoo here. Like I said, there's a few different places you can check it out, but we'll start with Yahoo here. So I'm in financials, and then we're down to income statement. So we're just scrolling down here, and then we're having a look here at net income. Okay, so basic earnings per share and diluted earnings per share. But if we also have a look, that is for the end of 2019. So we want the most up-to-date stuff we can find. So for this example, we're not going to use Yahoo, but this is a good place to start. And if you can't find that, then you can start looking other places. We're actually going to be pulling our latest earnings per share from a site called Macro Trends. Okay, so jump in, check out Macro Trends. Like I said, I'll leave a link in the description below for this as well. But this is the latest for the 12 months ending September 30th, 2020, was $8.77. That's a 40.1 increase year over year. So that's the figure we're going to be using today, is $8.77. So we'll go back to our calculator, and there it is there. I've already input this, guys. I'm just going to show you where you can pull these figures from so you can do it yourself when you're trying to run the numbers as well. This is just gives you a good indication of what the intrinsic value is. Like I said, you're trying to work out what the business will be worth in 10 years from now, and then work your way back to a price that you're happy to pay today. So anyway, let's keep moving forward with it. So the future growth rate, the windage growth rate, he calls this in the book. I love it. It's a great term. So future growth rate, like I said, we'll go back to Yahoo. So let's have a quick look at Yahoo again. Here we are. We're in the analyst section of Yahoo. This is a great section to look at if you're trying to, do a bit of research yourself. Scroll down, a lot of different analysts analyzing Facebook, so there's plenty of information out there on it. But like I said, do your own numbers. You can run your own numbers as well and see how close you are to the analyst numbers. But there is obviously a bit of guesswork around this. It's not a just set calculation, but this just gives you a good basic sort of calculation to work with to try to gauge your own intrinsic value. As you can see, there's a lot of different analysts over here analyzing it, but we are going to be looking at one key number today. And so this, over the next 5 years, analysts group average are coming in at 16.6%. We're going to round that down to 16% just to give ourselves another little margin. If I'm ever doing anything, any calculations or anything, I always try and give myself, I'll round it down rather than round it up. Okay, you can sort of make the numbers look a bit better if you round everything up or, increase things a little bit. So we're going to be taking that at 16%. Bear in mind, this calculator we're using is for the next 10 years. So this is where you can get a little bit of few discrepancies in it. They may not be growing at 10 or 20 or whatever percent they may be growing, and so you've got to sort of bear that in mind as well. But anyway, we're going to be putting 16%. So this is for the next 10 years. Now the future PE, the future price to earnings ratio, there's a couple of different ways we can go about getting this. The easiest way is just to double the future growth rate, so the windage growth rate. He talks about all this in his in the invested book, so I highly recommend, like I said, you get on and listen to this book or read the book yourself. But today we're just going to be taking the future PE as double the future growth rate. Reason being, there's two different options he says in the book. So one is you double that, or the second option is you have a look over the last 10 years of price to earnings ratios. So here we are on QuickFS, also another great resource if you want to start looking at the last 10 years of numbers on any business. And we're going to be looking at the PE ratio. And here we have the PE ratio for the last 10 years. And he says always pick the highest number, but you can see here, the highest number was 1,191.37. And then you always pick the lower of the two. Okay, so you look for the highest PE ratio, whatever that may be. And as you can see, historically over the last sort of 10 years, well, not quite 10 years, let's say, 8 years, you can sort of see it's hovering, especially the last few years here. It's bouncing around a little bit, but around that 32 sort of mark back here was not obviously way back here. They weren't earning as much. Early days Facebook. And then this was that 2018. I think it was looking quite cheap there at 16.92 price to earnings ratio. But so like I said, today we're going to be using 32. So we'll go back and put that in the calculator. So that's our future PE of 32. And then our minimal acceptable rate of return. This is, we're going to have 15%. This is what Phil Townley says, lock in 15%. You don't want to muck around with anything less than 15%. So that's what we're going with today. But if if your minimal acceptable rate of return is 20%, then obviously play around with that. But today we're just going to be going with 15%. Just a quick up here, guys. This is what he's talking about here as well. Rule 1 investor could safely buy the company in order to make 15% return over a period of 10 years. The margin of safety is a half of the sticker price, and it's sometimes referred to as the buying a $10 bill for just $5. If you've watched anything about Warren Buffett or read anything about him, he quite often talks about this in his annual shareholder meetings and things. He wants to pick up companies worth $10 but only paying $5. So that's what we're trying to figure out today, what the company is worth. So that's Facebook, and then we want to try and get that at below intrinsic value, so what the company is actually worth. So that's what we're mucking around with and playing around with this calculation here. So this is the future earnings per share. This is 10 years from now, be $39, and the future value coming in there. The sticker price, so that is the price of the company, and they're currently saying it's sitting at $306 with a margin of safety of 153. So if we go back and have a look and see what Facebook is trading for today, currently trading at $275. So with these calculations, you could say that Facebook is currently trading below intrinsic value, and then just have a quick look, see how that stacks up against the analysts. So see, a lot of them are all recommending strong buy, one or two maybe here saying, well, maybe one saying sell, couple underperformers and one hold there maybe. And then if we look down here, all these Wells Fargo, Morgan Stanley and all these other guys here, majority of them are just saying, just a quick scan saying buy. I'm not saying this, like I said before, this is not a recommendation or anything. This is just trying to get us a gauge on what Facebook is worth and what we're happy to pay. So we'll go back to the calculator there, and we'll just have a quick little play with some of these numbers here just to see, how that can affect things. So that's what they're currently saying there. But let's say they have a great, next 10 years they're solid, and they get maybe 18% growth rate, and then that gives us a 36. Then current sticker price is $408 and margin safety $204. So you've got to be real careful when you're putting these in. And like I said, this is more of a, there's a bit of guesswork around this, especially with the future growth rate and the future PE. So be very careful and mindful. If you're a bit hesitant, always give yourself a bit more of a margin with your numbers as well. Like I said, there's a bit of guesswork around a lot of this. There's no hard sort of numbers that you can sort of rely on to gain an intrinsic value. If I'm doing this personally, I personally prefer to use a discounted cash flow analysis, but this is also another great tool as well to use, when you're trying to value a company. But let's have a quick look over Facebook over the last sort of 5 years here, just quickly. and to see, where the price has sort of been sitting. So earlier in the year when the sell-offs were going on, 20th of March there we see it was down around that 149, sort of $150, let's say, only for a few days there, about a week maybe, give or take, a couple of weeks. That was, at a good price there. This is where would have been a good time to start buying. But then even if we look back to say, let's, what was this, December 2018, all around there it was trading, got down as low as $124 US. So, this share does come on sale from time to time. You just got to be ready to pounce when it does become on that, giving that margin of safety, getting it. So let's say it was like the 16, like we said earlier, 16 with a 32. They're saying the margin of safety price is that $150. So that's giving us that 50% below intrinsic value. But like if you're only happy with 20% or whatever price you're happy to pay, then obviously you're happy with that. Me personally, I'm trying to really stick to these 50% sort of rules, or even 50%. Then I will really start following the stock close. Anyway, guys, I hope you got some value from that. I'm not currently invested with Facebook, but this is definitely a business on my watch list, let's say. And I wasn't ready in March when the sell-offs were happening to pull the trigger and just buy Facebook, because the prices were looking pretty good back in the sell-offs of March there. Regardless of what sort of valuation metric you sort of run it, whether you run it on discounted cash flow or this particular metric as well, the numbers were looking pretty good, with those sell-offs in March. So if we do get another correction in the market, I will be investing in Facebook. And that's what half this video is today, is just trying to establish an intrinsic value of what I'm happy to pay for the business. So hope you got some value from it, guys. If you enjoyed the video, it'd be much appreciated if you hit that like button. If you want to see some more videos like this moving forward, then hit that subscribe button. But I'd love to, if you guys are, are you currently invested in Facebook? What did you pay for Facebook? What do you perceive the intrinsic value of the business to be worth? Drop it in the comments below. I'd love to get a bit more of a conversation going around this. Anyway, guys, going to wrap it up there. Hope you enjoyed the video. And like I said, if you want to see some more videos like this moving forward, then hit that subscribe button and you'll be the first to know when the next video drops. Alright, guys, stay safe out there. We'll catch you later. See ya.